Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra and with me are Hormis Vatakia and Reema Tendulkar. For the markets, we saw that sharp fall from the opening highs. The open number was 24,818. We saw lows of 24,632 as well. So that was almost a 200-point fall from the highs. But then there was a recovery, and now we have recovered around 50 points from the lows of the day as well. And right now at that 24,686 mark, very close to that 24,700 mark right now. Autos doing well. Pharma is also batting it for the bulls. There was some impact on the IT names, and that's because there was some forwards going around which spoke about how there is a possibility of Trump's plan to impose tariffs on Indian IT, and that is something which led to that sharp fall in the IT sector. But now there's a response coming in from Bloomberg. We wrote to them and they replied indicating that there's no such news piece that there has been on the Bloomberg terminal, and that is the reason we have seen some recovery that has come by as well. So it's an important clarification and indicates that there has been no such indication of any tariff on Indian IT as of now, and that explains the recovery as well that we are seeing in the markets right now. But you know, there have been so many conversations around tariffs that maybe markets took it for real, but there is an important clarification now.
Indeed, I think there's just fear in the markets, right? There's so much panic every time you hear. And you know, the IT services is such a price sector. It's about what? Overall, the Indian IT services must be $250–300 billion in size, right? A chunk of it goes to the US. I mean, there's BPO, there's IT services. In IT services, there are various geographies, and then US. But that's an important clarification. But just the way the markets are getting whipsawed. When the news broke, the Indian IT, the Nifty IT was down close to about 2–2.5% at the lows. And from there, you are seeing that recovery. Pull up intraday charts, pull up the large cap names like an LTI Mindtree, HCL Tech, Tech Mahindra. Some of these large cap names took such a beating when the news broke out. And now you are seeing that intraday pullback in these names. You know, I was talking to a few analysts and, you know, I asked them, I said, just hypothetically, right, is there a possibility of a tariff? He says very, very little. And if it comes through, you know, 35–40% can be wiped out instantly from the Indian IT companies. But what if he has to penalize the Indian IT services sector? What can he do then? He said then, you know, he might look at increasing the minimum localization requirement. So in his first term, he said that, you know, Indian IT companies will have to staff 65%. 65% of the work has to be localized. Got it. And that was introduced by Trump in his first term. And because of that, IT services margins took a hit because offshore cost of employees is a lot higher than onshore. And then there is a scramble to get talent. Right? So he's like, if you have to penalize, then maybe you would try and further increase 65% to another level. Indian IT companies, in response, because of the visa issues, they tightened the visa norms, anyway increased the localization. Minimum is 65%. They made it 70, 72, 73%. So they said, let's just keep a comfortable buffer. But at least from a market point of view, I think tariffing, you know, putting tariffs on Indian IT is not something which is in the base case at all. But that's an important clarification, and you saw the market's getting whipsawed. But let's talk about stocks, right? The Nifty is now closer to 24,680. What about individual stocks? Hormis is at the big wall, and he's putting the spotlight on the movers and shakers.
You know, the IT has been in the news over the last half an hour, but you know, there are some movers that have been hogging the limelight all through this week, and Atul Auto is one such name, and it was up 17% yesterday. It's up another 6.5% in today's session, and look at the volumes that you've seen in the last two trading sessions. We already had almost 1.2 crore shares change hands yesterday, and today, within the first 2 hours, we've already had half of that, or almost 55 lakh shares already change hands. And you take a look at the 20-day average in comparison to the 55 lakh shares, that's only 71,000 shares for Atul Auto, and courtesy of this move, the stock has broken above its 200-day moving average. And for the week, the first 5 days of the week has already made it the best month that the stock has had in 2025. The other one, of course, is Brainbee Solutions. The stock was down yesterday, but it's up 11% in today's session on very strong volumes. We've already had anywhere between 30 to 35 lakh shares traded. That stock also had over 1 crore shares being traded yesterday. Today's 30 lakh shares comparison to a 20-day average of around 5.5, and it's broken above its 50-day moving average of 369 and a 100-day moving average of 362 as well in today's trading session. And almost 24 lakh shares out of the 1 crore shares that were traded yesterday were marked for delivery. Moltech Packaging is the other one. It's up in 4 out of the 5 sessions this week. The highest volumes that we have seen since the end of July. We've already seen almost close to 3 lakh shares that have changed hands today compared to a 20-day average of just 27,000 shares. And after 2 negative years, the stock is up 30% this year. So it poised to be the first positive annual returns that the stock might deliver in 3 years. And the last one on the list is Vascon Engineers. The stock is up 15% so far this week. The best possible week that the stock may have since May of this year. Over 1 crore shares have changed hands here as well in the first week, in this week so far. In today's session itself, more than 55 lakh shares have traded compared to a 20-day average of just around 2.5 lakh shares. So Vascon Engineers almost 8% higher on very strong volumes all through the week. Back to you guys.
All right. Thank you so much, Hormuz. Some interesting names there. And the delivery data also indicates what's happening in the markets. But let's get in an important conversation going. We have been talking about that big GST rejig that has come by. Let's put focus on the textile space. Dinesh Nolka, Chairman and Managing Director, Nitin Spinners, and Atul Ganatra, the President, Cotton Association of India. They're joining us now. And the discussion will be around, of course, the big news, impact of GST rate cut, scrapping of import duty on cotton till 30th September, and growth outlook for the industry and the company as well. Gentlemen, good morning. Thank you so much for joining in. Mr. Nolka, let me start with you first up, because there have been various rate cuts on man-made fiber from 18% to 5%, on man-made yarn from 12% to 5%, and on finished products, the GST rate has been cut from 12% to 5%. Can you explain what the impact would be on the entire value chain because of this cut that has come about?
Good morning, and thank you for having me on the show. Basically, what has been done, we must first congratulate the Finance Minister and the GST Committee to have rationalized our inverted duty structure. And most of the demands of the textile industry have been met over here. So what they have done is that they have made it fiber neutral. Earlier, we used to have additional higher duties on the man-made fiber than the cotton fiber, and also correspondingly in the yarns. However, the fabric duty was more or less same. So what was happening was that all the man-made fiber producers used to have an inverted duty structure, and they used to have some duty remaining on their books. So with this change, what happens is they are able to pass on the duty immediately, and their working capital flows are improved a bit. Although they used to get the refunds earlier, but that we used to take maybe 6 months to 12 months time. So that is the major change. Secondly, on the ready-made garments, also we had requested that they should have a uniform rate, that is 5% for all the kind of ready-made garments. However, they have chosen to increase the limit from 1,000 to 2,500. We have still request pending with the Finance Ministry to increase this to at least 5,000 rupees. So we would request that it would be better if it is at the same level, but definitely if it is, we are thankful that it has been reasonably increased at least.
Mr. Nolka, just one follow-up question then. On account of the changes, by how much would prices come down by on an average? Will you look to pass on the entire benefit, or will the industry, look to retain some benefit on your margins, considering the hit that the industry is also already facing on account of the tariff front?
Over here, there is no changes in the margins. Actually, the GST used to be, GST was 18%, which used to be actually, and when it comes to the fabric, it was only 5%. It is still 5%. On the ready-made garments, up to 1,000 rupees, it was 5% only. So there is no incremental margin which is going to come to the manufacturers. Only their working capital cash flows will improve, and their ease of doing business will improve.
Okay, so no impact on the P&L as such, but the balance sheet will improve because working capital will be available, because earlier refunds would come in 12 to 18 months. So that's the impact for companies right now. Let's get in Mr. Ganatra as well in the conversation. Mr. Ganatra, a lot has happened in the textile space. One is the GST cut. Second has been those 50% tariffs that we are talking about. And the third point has been that the government has scrapped duty, import duty on cotton till 30th September. Can you tell us what are the on-ground impact? What is the on-ground impact of all these updates that have come by?
Yeah, good morning. We welcome this decision of GST cut. It was actually a long demand pending from the industry, and it has been fulfilled now. The And regarding, as you said, tariff, we from Cotton Association of India, we were having mainly three demands we have done to survival of the industry. Number one, import duty to be removed. That has been done. 11% duty extension given up to December. Second, our demand was export, yarn export and cloth export to USA. There should be a 15 to 20% incentive. That demand is pending. Third demand was CCI cotton rates are much higher than global prices. It has to be reduced for the benefit of Indian industry spinning mills to survive. That also CCI in last 15 days has cut 5% rate, almost 2,500 rupees per candy. So out of the three demands done by the Cotton Association of India, two has been fulfilled and it will be a benefit to the industry. But still we are waiting for some more relief.
What kind of relief are you waiting for, and how has the tariff scene impacted the demand overall? Is there a big cotton export that we're seeing to the US already?
See, as you are aware, our total textile export is around $40 billion. And out of that, 1/3 is to USA. So definitely tariff has hit to the industry and mainly to the garments which was about to be made for USA or dispatch. Everything is become standstill. And that impact of the garment industry is slowing down. It has come to the spinning mills where the yarn demand has been slowed down. The prices of yarn also has been reduced to 10 rupees, 15 rupees a kg. And still there is no much big buyers. So definitely this tariff has hit to the industry, but government is kind enough to look after the demands of the industry to survive. And most of the demands is given by the government, and we are looking forward that within another 2 weeks of time, we will have a further relief from the government. We feel that there will be a incentive will be given, and also there will be a CCI may reduce further rate of the cotton as looking to the big stock what they are having it.
Sure. Mr. Ganatra, morning, just some numbers. What would be the value of exports to the US in the month of August? You said it's come down significantly. What's the number now?
No, I don't have a correct number, but the export to USA has come down, and we may see coming months also the figures will come down, because I have heard that USA buyers are asking big discount, 30%, 35%, which is not possible for Indian exporter to give at present. There is no that much gap or profit is there. There is a big competition India is having from the country like Vietnam, Bangladesh, China.
Okay.
So it is not possible to give discount, big discount.
So just one more point about the flow-through impact. You said yarn demand and prices have also been impacted. Would we have numbers? Yarn prices today, how much lower is it compared to what it was, say, 6 months ago?
Yeah,
and even demand.
I will tell you the example. In Gujarat, 30s hosiery yarn was 245 rupees 2 months back. Now today it has been traded at 228 rupees. So almost 15 to 17 rupees down mainly due to tariff. So mills who were doing good for the spinning from last 6 months.
Okay.
To 15 rupees a kg loss in the cotton yarn spinning. So we feel this GST cut, the spinning mills may shift from cotton to man-made fiber, and experts say 5 to 7% shifting from cotton to man-made will take place this year alone.
Okay. Mr. Nolka, do you want to comment on that? Do you think that shift will happen? Would you see that in other spinners as well? And you do also have sizable exports going to the US. What has the conversation with buyers suggested? And do you think the UK FTA could help recoup some of the losses that we are seeing?
Let me first tell you that we are primarily yarn and fabric manufacturer, and we have very limited exposure to the USA. Our direct exposure to US, direct and indirect all put together, is less than 10%. So definitely there is an impact, but that can be mitigated by exporting to other countries, at least for our company. But for industry in general, we have a total exposure of about $11 billion of exports are happening to USA. And with this additional 25% tariff is completely unbearable for any of the industry, since even our customers and even the manufacturers don't have this kind of margin to bear this kind of tariff. So definitely there is a lot of hue and cry, and that led a lot of issues related with tariff. And as Ganatharaji told, there is also stoppages in the industry, especially on the garments and the home textile side. So that is one of the major concerns as of now. As far as yarn prices are concerned, definitely yarn prices have come down, and that is primarily due to the pressure from the international market. Everybody knows that India is in a peak spot at this point of time. So there is a pressure from the international market on the prices. Even the cotton prices has also fallen, and also here Indian prices have.
All right, we take that point. Mr. Nolka and Mr. Ganatra, thank you so much for joining in today and telling us what the impact of this big GST rejig be on the textile space and the other aspects of macros as well, especially the tariff that has been levied right now. With that, we'll slip into a break. Up next, we'll put focus on the crypto market with Manisha Gupta on the other side. Stay tuned for that.
Powered by Coin DCX.
On Crypto Corner today, we are joined by co-founder of Chainlink, Sergey Nazarov. Sergey, hi, thank you so much for joining in. And congratulations are in order because the White House has endorsed you, highlighting Chainlink's crucial role as a decentralized Oracle network, also acknowledging the kind of importance that you are really bringing into stablecoins.
I'm seeing a lot of adoption in DC of blockchain technology generally, and because Chainlink is the leading provider of a type of that technology called oracles and oracle networks, I think it's very natural for the US government to start, adopting our technology as well. Also, we've been very active here in DC in terms of helping create various legislation, guidance from a regulatory point of view, trying to work with the regulators, the new ones that are very pro-crypto and pro-blockchain. So I would say that we've just been very involved in DC, both from a perspective of providing guidance from the industry's point of view in a way that it helps both the US grow and the blockchain industry grow both in the US and globally. And then we have basically the best-in-class technology to solve certain key problems that financial institutions have, but also governments have.
Sergey, as you mentioned, Oracle has been the technology that's making blockchains more connected and compatible, also paving the way for new digital finance use cases, would you say?
Yes, absolutely. I think our industry is at a crucial inflection point where it's going to go from being about cryptocurrencies, which are highly speculative, into the tokenization of equity, commodities, funds, and basically the entire financial system. So I think the amount of value that's going to be tokenized from the traditional financial system into the blockchain-based financial system will surpass the total value found in cryptocurrencies. And so our industry will naturally become not about cryptocurrencies, but about the tokenized version of an equity, of a commodity, of a fund. And it'll be a similar shift to what you saw with the internet, where at a certain point in the early days of the internet was synonymous with email, because email was the first use case of the internet. And that's kind of what cryptocurrency is. It's the first use case of blockchain technology and oracle networks. But now what you have moving on from there is the tokenization of these financial products, which I think will, by the numbers, define our industry more than cryptocurrencies.
Oh, well, absolutely. And moving on to tokenization, as you said, is going to be a game changer. But would you also say that it is about institutional adoption of digital assets that we've seen in this year? That could be yet another thing in game changing for the industry.
Yes, that's exactly what I would say. I would say that it's a complete redefinition of our industry. And that redefinition is now being massively accelerated by the US government as a priority for their economy. And because the US economy and the US financial system is the largest financial system, when it accelerates a certain type of financial product, that naturally accelerates it globally as well. So I would say that we are definitely at a key inflection point where we're now going to go straight into massive tokenization, but not of more cryptocurrencies. I mean, you'll have more cryptocurrencies, but it'll be much more about the tokenization of these traditional financial products. And the tokenized versions of those financial products will be much better than the traditional financial products.
Sergey, the other feather at the cap clearly has been Chainlink and MasterCard connecting, and that partnership that you guys have taken off. It is also connecting the off-chain payments world directly to the on-chain DeFi world in close partnership. Would you say the traditional finance and the DeFi convergence is clearly coming at fore now?
Yes, the MasterCard partnership is a very good example of how Chainlink is able to synchronize between the traditional financial world and the new decentralized finance Web3 blockchain world. Basically, we were able to allow MasterCard transactions using traditional MasterCard payment rails, together with a number of partners, to be converted into a transaction on a blockchain for the purchase of something in the Web3 public blockchain ecosystem. So this means that a MasterCard holder was able to use their MasterCard. They didn't have to deal with the blockchain, but they were able to interact with the blockchain through that MasterCard purchase. And so that's very powerful because you have over 3 billion MasterCard holders. And that is kind of the other thing that I'm seeing is that people assume sometimes that the blockchain in the Web3 world will destroy the old systems. I personally don't believe that. I think it'll be like the internet, where the existing systems choose to adopt blockchain technology as the new environment in which they conduct their transactions.
Sergey, I have one more question, and this is a forward-looking one. If you look at 2025, it has been a very strong year, whether it is about adoption levels or even the price moves that we have seen in various cryptos. What is it that you're looking at for the rest of this year, and what are the plans really that Chainlink has going forward, especially when it comes to central banks across?
I think it's been a historic year for our industry for sure. I think thanks to the Trump administration and their massive push for our industry to have, not only leeway, but to have a lot of corrections done to what was unfairly done to our industry previously, which artificially depressed what our industry was able to do. So I think the Trump administration has done an amazing job getting our industry into a completely new place, which I and many people in our industry are grateful for. From our point of view, the institutional side is where we see a lot of new adoption. We've been working with institutions basically since the start of Chainlink, including Swift and large banks, large asset managers. And in the process of working with them, we've kind of seen the evolution of their thinking and how serious they are about going on chain in production. And what I'm seeing now is that they're going on chain in production live now this year. And the ones that are going live this year are looking to scale it next year. And I see many, many more on track and with approved budgets and approved launch plans to go live and into production next year. So there's a lot of institutional adoption that we're dealing with at Chainlink because we're the leading provider of various critical capabilities to create that next level of tokenization, the equity, commodity, and fund tokenization. And then we're also now seeing more and more interest from governments because the institutional adoption makes the governments pay attention. Government adoption takes the form of government agencies choosing to use blockchains for certain things, like together with Chainlink, the US Commerce Department put data on chain for the first time, various key economic data, and also central banks. So we work with a number of central banks. We've been working with them before 2025, central banks in Asia, where I would say the most active. And the central bank level of interest in blockchain technology, especially around stable coins and payments, has also massively accelerated. So we're also doing a lot of work there.
All right, so there's lots to expect as we go ahead from this year as well. Thank you so much, Sergey, for joining in. It has been a pleasure with that conversation with you. But with that, that's all the time that we have on Crypto Corner. We'll head for a break, but come back with more news and updates.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Still 40 points lower on the index, 60 points off the lows, but still, of course, 150 off the highs of the day as well. So very choppy moves we are seeing on the index in the last 60 minutes or so. Aditya Agarwala from Invest for Edu joins in for a quick chart check. Aditya, good morning. Thank you for joining in. At one point we were close to 24,850 just a few minutes earlier. Now we are below 24,700. What do these distorted charts look like for the index? Now you still continue to remain in the range, and what are your stock calls for the morning?
Good morning, Hormuz. Thanks for coming on the show. It's a complete flat market, I would say, and a range-bound move as well. As you look at the VIX as well, it tells you that markets are absolutely flat and in a range, and that holds true for both the Nifty and the Bank Nifty. After a bit of a correction, it's more of a consolidation on the Bank Nifty that we're witnessing on, and similar kind of a move on Nifty as well. On the upside, clearly, as you mentioned, we were somewhere around 24,800, 850 on the upside, and from there we again clawed back to levels of 24,600. So my sense is till the time we don't take out 24,800 decisively on the upside in trade today in the second half of the session, markets will remain in this range. Almost, I won't read too much into it. I don't think so. You will see a massive correction as well on the downside. 24,600 should hold for the day. And fresh longs can be taken if market takes out 24,750, 800 on the upside for another 100, 150 point rally on the Nifty. Bank Nifty somehow continues to drag. That is where the real pain lies. And once Bank Nifty starts to trade above 54,400, that is when you will see a real short covering rally. Till the time almost we see a trade above 54,400 on the Bank Nifty, you will not see any real move on the Bank Nifty, and that is where the real drag is. So my sense is traders should avoid trading the indices as of now, both the Nifty and the Bank Nifty, because both look little choppy and in a range. Only on Nifty, if it manages to cross levels of 24,750, 800, then a fresh long can be initiated with the stop loss at 24,650 and look for a target of 24,900 to about 25,000 on the upside. Then there are sector-specific activities which are going on that I think one should clearly focus on those areas almost.
Okay. What are some of these individual names that you're looking out for?
Couple of them, Sonal, I've got buy recommendations on. We're clearly seeing a good traction as far as these new age companies are concerned. So Eternal is looking quite interesting on the chart setup. It's a fresh breakout into an all-time high territory. My sense is this up move is likely to continue even from here on. So at current levels, I'll be a buyer for a target of 360 on the upside, place a stop loss at 323 on the downside. So Eternal is the first stock on my radar. The second one is KPIT Technologies. That is also looking quite interesting after a decent bit of a consolidation. Stock is now showing an upside potential from these levels, and a good volume action was also seen in morning trade. So I'll go long on KPIT Technologies at current levels, look for a target of 1350 on the upside, place a stop loss somewhere around 1170 on the downside. Solan.
Thank you very much for that. We will slip into a very short break. We'll come back and discuss market fundamentals. Ashi Anand from IME Capital will join in next. Welcome back. The Nifty is hovering around 24,700 after that volatility that we saw about 1 hour back. Things seem to have stabilized over the last 30 minutes, just mildly lower on the benchmark indices. Ashi Anand from IME Capital is now joining in to talk about the markets, individual stocks and themes that he likes right now. Ashish, the big story that's dominating headlines is the GST reform. So based on what we've seen and heard so far, have you made any changes to your portfolio?
Yeah, hi. Firstly, thanks for having me on the show. The GST reform is actually quite interesting, and it does kind of change, I think, the sectoral and market outlooks a bit, because it's not just the GST reform. You have to look at the GST reform in conjunction with the fact that there was a decent kind of stimulus coming in terms of income tax cuts earlier in the year. And you've also had kind of a cut in interest rates. Now, a combination of these three together does actually lay the foundation for a consumption recovery. This is consumption as a sector has actually been kind of fairly muted over the past couple of years. You first had continued weakness in rural. This was followed by kind of weakness kind of creeping into urban consumption as well. Now, with all three of these kind of coming together, I think we are fairly well poised for a recovery in consumption as we go into the second half of this year. And given the fact that a number of these companies have been actually laggards in terms of stock performances, there is kind of a space for consumption to actually start to participate and also kind of be a driver of the markets going forward. So consumption is a space that we have been increasing exposures to a bit. But it is important to just kind of understand that it's not that valuations of the high quality franchises are still very attractive. Room for substantial valuation re-rating is fairly limited. So you are going to be dependent on earnings growth. And we really have to see how much these various measures kind of come together to kind of propel consumption as we go into the second half of this year.
So when you're talking about how much it really reflects into consumption, Ashi, some of the sectors or specific stocks that you think will benefit the most if these cuts are actually passed along?
Yeah, sure. So, firstly, at one level, I think we've been very positive on pure play digital companies. It is important to understand that a lot of these are actually direct beneficiaries of kind of consumption growth. A lot of our digital companies in our portfolio do actually benefit from this. That said, in terms of other sectors, you clearly have kind of consumer durables being a fairly large kind of a winner here, because these are larger ticket kind of consumption items, and consumer durables along with auto clearly are big beneficiaries. Auto is a space that we are not as bullish on from a longer term perspective, primarily because we aren't very clear in terms of the EV transition risk, how that will actually impact longer term market shares and profitability in the sector, and which is why it's a space we've been quite cautious about. But I think consumer durables is clearly quite interesting. FMCG is another space that certain segments have actually clearly benefiting from that 18% to 5% reduction. And that again is a space that could you are likely to kind of see a bounce back of volume growth, because this will kind of reduce prices for the consumer. Largely consumer-oriented insurance on the margin will be slightly positive. But I think it's really the whole auto, consumer durable, and kind of the FMCG pack that we're really focusing on in terms of the GST reforms.
You know, Ashi, call me being the devil's advocate here, but 2 points that you mentioned, we were not so bullish on the auto space because of the uncertainties around the EV transition, but the companies are still making or increasing their EV exposure as a part of their portfolio. Or something on those lines, and the EV adoption is increasing in India in comparison to a lot of other countries. That's point one. And point two being the fact that, yeah, daily essentials, yes, the GST rate cuts could act as a benefit, but for consumer durable names, we are entering into a seasonally weak period as well. So does a GST rate cut necessarily translate into increased demand? Because that is something that you would want to see on the ground first as well, right?
No, sure, absolutely. So the two separate questions, let me just take both of them. Firstly, just coming to the GST kind of cut, right? And in terms of the impact on the ground on consumer durables. Now, one of the big durable segments has actually been kind of air conditioners and refrigerators, etc. These depend on a strong summer season, and the summer season has been weak. There is kind of channel inventory sitting on the ground. So I don't think GST cuts on its own is going to be enough to lead to an immediate recovery in the sector. But really, when you are looking at kind of companies, you aren't necessarily just looking at this quarter, the next quarter, but more in terms of the short to medium term kind of growth dynamics. And if you are kind of looking at the GST cuts in consumer durables, this has kind of clearly reduced the kind of price. The entry price for an AC would have reduced quite substantially. The same for TV, for fridge, etc. As kind of seasonal factors play out and demand starts to come back, this is clearly a big positive. And the moment you take the combination of GST cuts, interest rate cuts, and kind of money in hands of consumers, especially at the lower segments because of the income tax cuts, it lays a strong foundation for a growth recovery. I mentioned a second half because there currently are some kind of headwinds, and which is why the growth recovery may not be imminent. With regards to kind of auto right now, this is something you kind of have to get a bit segment and kind of company specific. I think the segment we are the most concerned about is really two-wheelers. Now out here, if you're just looking at what's happening in the market from a slightly longer term perspective, over the past few decades, it's been a two-player market.
Okay. All right, Ashi. Thank you so much for joining in today and giving us all those details and the fundamental outlook on the markets as well. With that, we'll slip into a short break. We'll get you excerpts of Rahul Joshi's interview with Union Minister Piyush Goyal. Stay tuned for that conversation.
Welcome back. Let's get to a Network 18 exclusive. Commerce Minister Piyush Goyal says the India-United States relationship is the most consequential. He also said India is a patient country, believes in dialogue and diplomacy amidst the tariff standoff with the Trump administration. He also said GST reforms are transformational for the economy and the industry has committed to pass the GST cuts to consumers. Listen in.
When the housewife goes out into the market, almost every product of daily use, all food products, all processed goods, foods, all material that is required for her kitchen, foodstuffs, utensils, everything will see a transformational reduction in prices. And industry has committed to us that they will make sure that the full benefit is net of input taxes is passed on to the consumers. So consumers are in for significant gain, and I'm very, very confident. Industry has, across the country, every sector, assured the government that they will be with the government. They recognize lower taxes, lower prices will give buoyancy to demand, and higher demand leads to higher taxes, and ultimately higher demand also promotes more investment because the demand leads to more manufacturing in India. So it's a virtuous cycle of growth, and the multiplier impact is what will give India a big boost.
Okay. Let us also talk a little bit about the revenue implication or the revenue impact that this might have. You know, by one estimate, about 48,000 crore would be the revenue impact. Do you see that, you know, we will be able to take care of this, and, you know, any kind of fiscal slip that you see, you know, going forward?
Rahulji, we are currently collecting nearly 2 lakh crores every month. And with this boost in demand, the revenue will probably go up rather than being a revenue
So
loss.
you're expecting some amount of revenue buoyancy as a result of this?
So it is always so. And I think that every theory, economic theory suggests that.
So will it give some comfort to the markets as well? They have been slightly soft over the last few quarters. Do you think it will also give market men a reason to celebrate because bold reforms are on the way, that this government is not hesitant to take risks?
I think very clearly the market recognizes that we are in safe hands. I am very confident that this and the impact of this starting on the first day of Navratri on 22nd September will give a big leg up to the economy, to GDP growth, will ensure that Indian investments continue to power on, will attract more people to set up base, because ultimately when there is demand, there will be interest in investment to meet that demand. And a growing demand means growing jobs, growing number of people required in the supply chain. More investments will lead to jobs in the manufacturing side. Services is already growing in a double-digit level. You saw the numbers, the services PMI is at an all-time high almost. So I think all in all, India is poised for a very bright future.
You know, till about July 6th or 7th, things seem to be going fine with in our negotiations with the US. Then in a matter of weeks, you know, we had a tariff of 25%, then another 25% on top of that. What went wrong in these few weeks?
Well, I think the US-India relationship is one of the most consequential relationships on the globe today. We are two very large democracies. We believe in the rule of law. We are allies and friends for long. We have had certain blips, like we had the sanctions post the nuclear tests in 1998.
Yes.
I look at this only as one more situation which will pass as there's a deeper understanding of the reality of the situation. And I'm very confident this relationship will only strengthen in the years to come.
And how soon do you expect things to resolve?
It could happen soon enough. It may take some time. Irrespective, we will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific. In some sense, it's a very multi-dimensional relationship where we contribute to each other's economies in different dimensions and will continue to do so.
It's comforting to hear these words from you. And we also picked up that you said somewhere that things could happen as soon as November. Is that a correct?
Well, if you recall when Prime Minister Modi and Honorable President Donald Trump met in February, they had tasked the two teams to conclude the first tranche of a bilateral trade agreement by fall of 25, which is about November 2025. And I'm sure we will continue to be engaged to try and find solutions to reach that outcome. If at all it's give and take a few days, a few weeks, a few months, in a nation's history, such small periods will not define long-term objectives and goals.
I think what surprised and even shocked some people was the erratic and incendiary language that was used by some of the officials of the Trump administration, calling it Modi's war or, a laundromat of Kremlin. I mean, how do you react to this? I mean, are conciliatory noises coming from the other side now?
I think there could be either some misunderstandings or some personal opinions that may be reflected in that. I do not think that deters the US and India from continuing to maintain our strategic alliance and partnership. Our friendship is far stronger than a few comments that may be made by a few people.
Exclusive conversation there with Piyush Goyal. Just before we take that break, just pull up the Nifty IT index again, down now closing in on that 2% fall after a brief recovery that we had seen. So that recovery is also getting sold into currently. So at the low, not at the lowest point of the day, but nearing the day's low is the Nifty IT index, almost a quarter to 1 3/4% lower now, Rima.
There's a company called Endava. It's a mid-sized company. It's headquartered in UK, and it is a competitor to the Indian IT companies. And they came out with the numbers yesterday, disappointing set of numbers, and the stock was down 30%. So there is a rub-off impact on account of Endava too. But get into a break. On the other side, our conversation with the METI Secretary. Stay tuned. Welcome back. Let's get you more important opinions. Secretary of the Ministry of Electronics and Information Technology, METI, tells CNBC-TV18 GST is a forward-looking reform. Downstream players will stand to benefit from the GST cut. He spoke to our colleague Ashmit Kumar on GST, semiconductors, US tariffs, a lot more. Listen in.
There are 2 or 3 things which are important here. The first and most important thing from an industry perspective is that rate simplification in GST and reducing the number of effective rates is a huge ease of doing business improvement. It ensures that problems of classification, other issues that companies typically have are reduced considerably. So I think from that perspective, this is a very forward-looking, much-needed reform, and I think it's a very significant reform. Now, it also so happens that when you've eliminated the 28% rate and you've brought it down substantially by 10% to just 18%, a large number of goods, particularly in the electronics sector, fall within that category. In addition, a large number of white goods and other goods of mass consumption which use various electronics parts as inputs also fall within that categorization. It should, as you pointed out, coming as it does just on the eve of the festive season, certainly help consumption and lift the spirits in terms of consumption. And it plays on the idea that India is a big market and Indian consumption itself can contribute significantly to the growth momentum in India. So, and for the electronic sector, that is important as overall volumes of consumption increase, as more gets consumed, and downstream all the players in the industry clearly will get benefited. So I think that's a big plus.
On a slightly different tangent, while in keeping with the semicon, the Prime Minister made a recent visit to Japan, then subsequently he went on to China. Commentators say there's now a thaw in relationships between Delhi and Beijing. Can there now, perhaps, is there a case to be made for a potential collaboration, perhaps more cooperation between the two countries when it comes to focus areas like semiconductors, like electronics?
See, I think we need to be clear. China's primary strengths is in the electronics space. They, of course, have some strengths in semiconductors and they're working on it, and clearly those are efforts they're making. But semiconductor-related technology we can get from other locations. China's strength is in manufacturing of electronics, and that is something which we would like to see how at least some of that is something which comes into India, because it's not just about Chinese companies investing in India to make for India or make in India for the world, but it's also about all other companies, whether it's an American company, a Taiwanese company, a Korean company, and a European company, which currently manufactures in China, wanting to look at an alternate location, and that alternate location hopefully should continue to be India. And for that, you still need to collaborate with China to make sure that the shift happens.
We take a leave on this edition of Trading Hour from Rima, Sonal and me. Thank you for watching. We leave you with the Nifty just 30 points away from the lows of the day. The IT index continues to maintain its losses. Halftime report on the other side.